Good morning, everyone. Welcome to the metal markets. I'm Market Stalker D, your host. I do have a copper trade on, which we're going to talk about in a second. But before that, I'm going to introduce myself for those of you who might be here for the first time. I've been trading for 20 years. I am a commodities trader, mainly trading precious metals, base metals, and also energies markets such as crude oil, RBOB gasoline futures, and heating oil. But the goal of this show is to provide you first and foremost with an overview of some bigger anchor levels, as I like to call them, for the day ahead of us and maybe even a week ahead of us. Now, this is a short week. We have Good Friday coming up on Friday. And the weird thing is that we are going to have the NFP release, but we also have the end of the month today. How does that impact price activity? Well, if you notice that a product goes into a single-sided extension auction, maybe try not to fight that, because more often than not, at the end of the month, that is an institutional positioning for the end of the month, and in this case, end of the quarter as well. So that needs to be somewhere in your plan as a potential opportunity, probability, and all that good stuff. Now, Bruno has posted the risk disclaimer in chat. Please make sure to familiarize yourself with it. This is not a signal service. This is an educational show, just like anything else you see on Topstep TV. And don't follow things blindly. There is a pretty decent delay of about 10 to 15 seconds between my real-time delivery versus what goes out on YouTube. And that means that some crucial aspects of maybe some entries could be a bit tricky to deal with. So we try and teach you how to fish, not just give you a fish, right? Okay, so let's focus on gold first and foremost. I have the daily charts on here. So the daily and copper, daily chart on copper and gold both look fairly similar. I think silver might be a little different, but not too different. Just a little bit more bullish, right? However, I'm still looking at a potential breakout from this whole accumulation area, because we do have a pretty clean move down that typically means after the accumulation you go into a markup phase. This is your standard Wyckoff. I call them phase ones because I could never properly remember accumulation, distribution, reaccumulation, so I just made it easier for myself, so I call it phase one. And if it does start to run to the upside and we manage to close into the area above 46.50 with quite some conviction, I would not fight that today. Personally, like I said, end of the month, gold is pretty low down. It is below 5,000, and some people may see this as a good opportunity to get in on some longs, so some bottom pickers, right? But the reason why I'm not trading gold is because I feel that copper has a slightly stronger fundamental side to it, and China has an increased interest in buying copper. So at some point, I'm expecting to see that come true intraday. Gezim says, hi Deeyana from Kosovo with love. Ciao, ciao, kako si? I don't know whether you speak Serbian, whether that's still a thing over there. But yeah, lovely to have you here. I'm Belgradian originally. The liquidity spikes are super fast even overnight. Yeah, that's absolutely true on gold. Even when I'm trading gold, I'm only trading it with like 1 micro and 220 tick stop, just to make sure that I'm not shaken out. And yet my hypothesis is still on the table, but I'm not in on it. I'm one of those traders that is more irked by missing out on the move rather than just being outright wrong on the trade. So yeah. Yeah, so let's have a look at some intraday timeframes. Now, crude oil, I don't know what they're doing with crude oil today yet. So anytime I'm in doubt, I tend to stay out. So because of that, I want to wait until maybe NYMEX and see what they want to do in and around the London close. I sometimes do have a setup for crude oil this early on. I did actually try, you see these 27.58 bucks that I made, just enough for a McDonald's Happy Meal, right? So it was an idea that crude oil is going to retest the value high from London and then bounce from it, but it just started to go too deep into it, and then somehow I was getting ready and there was like a whole bunch of stuff happening, so I decided to close it. For like a minor profit because I didn't feel it was actually progressing. And of course, as soon as I closed it, it just kind of smashed higher. But that's okay. It is, you can't win them all, you can't catch them all. And right now, because it's kind of run away from the level that I was looking at, I'm looking at 105.50 as my next point of interest. And until it gets there, I want to stay out. Now, one slight statistical relevance is whenever London goes into a huge extension, typically we have a pretty decent reversal pre-market from relevant anchor points, and 105.50 could be one of those. I mean, we do have Asia higher up. We'll see how they want to play it. Crude oil is extremely volatile still. So I just don't want to rush. And since I had a pretty good Monday, even though I thought it was a Tuesday, if you were here on group coaching yesterday, I was banging on about Tuesday's stats, having a senior moment there. And luckily, the hypothesis wasn't just based on a Tuesday, right? It was based on the fact that when you get to a certain time of day, during NYMEX, the complete failed auctions and rotations through the entirety of NYMEX initial balance tend to fade. Like, they are so rare that I think, I don't know, in the last 10 years, I don't know whether I've seen maybe 10 of those happen. So yeah, and I suspected that we're going to have a version of a zombie rally in crude oil, which is exactly what happened eventually. I am not ever bothered by the wiggling inside my trade zones, so I don't look at the stop losses as like, oh my god, it's a stop. I look at it as an entire zone, and then I want to give the trade time to do whatever. My stops are always at pretty far invalidation points, and I always try to get them under or over either gamma walls or high GEX levels. So in the case of crude oil yesterday, I had that 102 early on, so you were here with me, and that one worked out. I mean, I could have left it in until 100, but because it was Monday, I decided to be a little less, let's say a little more aggressive on the profit-taking side, just to put me on the right track, and that worked out. So if I go into my performance stats from yesterday, I ended the day up 979. Now, most of that was the crude oil long that I held for a very, very long time, but it was also a little bit of copper, so it wasn't all just crude oil. All right, let's get into some intraday levels as this copper thing is wiggling around. So I'm going to drop down to a 30-minute time frame on gold. I'm also going to pop a volume profile fixed range. And why is that not showing up? That's weird. Okay, so that's a bit of a buggy bug there. Alright, so we're just gonna have to do without the profile today. Tokyo high, Tokyo low is something I like to put on the metals specifically because they are super active during Asia these days in the last couple of years. So obviously we want to have that as a potential for reference points later on. Then in the middle of that range, VWAP was very flat. Now we're getting that sort of pre-market movement, wiggling decision points. But really on gold, I have this dual pin wall down at 4,500 and nothing in between. So for my money, I would be waiting until we get some more relevant areas in gold today and then decide. But, overall, I'm kind of bullish on it. We'll see whether we're still inside that daily range or we try to exit it. We're far away from any kind of average statistical ranges. So ADR low on gold currently is around 44.80, and then to the upside we have plenty of room up to 46.77. If I go higher, there is a level up at 4700. That is a moderate call wall, but I would expect them to maybe make a decision if they ever retest 4600. If they don't do that, maybe we go into a bit of a hangover day because we've had some pretty large days, right? And if they don't want to move it today, that's fine. That can happen too, especially on NFP weeks when people are waiting for something to happen. There's also a little bit of a risk off sentiment, where we expect the commodities to keep going higher. However, gold and equities have got into a positive correlation, so that's not entirely true. Everything seems to be slaved to the crude oil movement at the moment, and the way correlations are looking at the moment, we have kind of a middle of the range correlation between ES and GC. So we have about 0.4, so not a terribly high correlation. And yet equities and crude oil are nearly a factor of -1 correlation. So that's it still means that if crude oil keeps going higher, that means equities will probably keep seeing the downside even more. So that is something to consider. But yeah, gold a little bit messy where we are at the moment. Currently it's sitting inside the value area from yesterday, but also from the COMEX value. So it might be trying for a value acceptance downward. We have a minor level at 45.75. So that could be a bit of a chop zone here. I don't think this would be a clean value acceptance down. So yeah, gold is a little tricky. So until we get to like 45.10, 4500, that's the highest area where I would want to become a buyer maybe. And if not, then I'm looking at 4600 gamma wall and how this particular product is going to behave over there. I will get to your questions in a second. Let me just finish the analysis. All right, let's drop down to a 30-minute time frame. Otherwise, these intraday levels look all smushed together. So, crude oil. Sorry, what is this? This is copper. Wake up, D. Wake up. Slurp of Celsius required. Not sponsored. Alright, VWAP's still super flat, right? It's just flatter than Kate Moss's chest. It's quite worrying. It's not really giving me much to work with. But we've touched the gamma wall, right? Gamma wall on copper today is at 550. There are some higher levels up at 560. And then really if they start to drop, so let's say that I'm wrong on this, I have nothing. Whitney Houston. I have nothing until 530 and nothing below that all the way down to 520. So that hasn't changed. That's been there now for a couple of days. But yeah, if they do start to exhibit velocity to the downside, that will mean crude oil will probably keep shooting higher past the 105.50 gamma wall. And in that case, we will need some contingency plans, which is fine. I do have those as well. But if I look at where the next area of interest for me is, I'm looking for a failed auction from this London initial balance, and I'm looking for the market to at least rotate to the Tokyo high where we came from, right? Let me put a couple of lines so that you can know where the initial balance was. This is the initial balance low. And this is the initial balance high, right where this Tokyo high is. So, I mean, do we even need to put a marker? Let's do it. Let's do it. Let's make it all messy. Actually, let's put the initial balance high at the top so that it's a little bit better. Okay. Now, when they smashed through the initial balance low, I did see a sweep. But what they usually do, they do this like excursion, as I like to call it. So as we get closer to the COMEX side of things, the volume starts to increase. Now this is something that we were never able to observe in real time during my old time slot, and this is the time when I usually find pretty good setups, partially because of the increased volatility, but also because that is the time of day when these rotations really start to come true statistically. Of course, anything can happen, but traditionally copper tends to be a bit on the neutral day side, so both sided extensions for the London session, especially pre-COMEX. And then things change when COMEX starts. Then you get another initial balance reference, and statistics over there are a little bit different. So my trade here banks on the fact that that rotation is going to happen. Now, obviously, we have the gamma wall defending this whole area. If the gamma wall breaks down, that is it for this hypo. In that case, I will be waiting for the COMEX initial balance to develop, starting very slow on like 3 micros. I'm not planning to scale in here. My first objective in any new XFA is to first clear the trading drawdown and to not go like full porting and doing stupid things until I'm safely above that line. Having said that, I always like to add 1 micro per every 2,500 of actual balance, whether it's pre or post payout, doesn't matter. But that is just my sweet spot. I know that some people in the community are like, oh, you can add 1 micro for every 500. I think that's way too aggressive. We see way too many people just blowing out accounts left, right, and center. And contrary to popular belief, like you know, yes, that is revenue for the company, but we don't want to see people going through like 1 million combines per month. We ideally want to see people who have the chops to manage one account and to manage it well, so they can eventually graduate to the live account. Now, I do realize there's been some changes in the live account side of things, so at this particular moment, I don't even know whether I would be eligible because I'm in the UK, but let's just hope that's just like some limited OFAC stuff going on with the Iran war, and we're not going to see that stay for too long, but it is what it is. All right, let's tackle crude oil quickly. I already mentioned that 105.50 gamma wall. Is it a gamma wall? Yeah, it's a gamma wall. So let's roll down to a 30-minute time frame. I don't have too many markers on here, primarily because the bigger anchor points are quite widely spaced, which is good, right? It gives us risk reward in that way, just looking at how much space you have from one options level to the next, where we expect the dealers to engage. But for now, it's kind of heading pretty strongly towards that gamma wall, so I want to see what happens there. Maybe some failure of that and a bit of a pullback, but again, in this situation where it's the final day of the month, they are pretty concerned about what is happening in the Middle East, and nobody really knows where we are at, right? Nobody knows what's happening. And I kind of feel that after 2 massive days of just straight upside in crude oil, we could be in a situation where today is a bit of a hangover day. So I'm not really banking on kind of going, yeah, let's get another crude oil trade that goes for 1 million ticks, right? I don't know what that voice is, I'm sorry. So yeah, we'll see what happens at 105.50, and then we can kind of adjust. Gamma flip is actually really far out, so all of this stuff in crude oil is technically negative gamma, which means that 105.50 could be quite tricky. And in negative gamma, these levels, they do work, but more often than not, they will be doing a lot of whipsaws around it, right? They can like smash through it by 100, 120 ticks and then decide to slow down, then drop through it, then do a bit of pinning. So I don't know which we're gonna have, but it is definitely a possibility in negative gamma. Everything gets a bit more messy. And that is a similar situation with copper as well. The gamma flip is all the way up above 6. It's 610, so that's very, very far. The way I do those, I don't do just like nearby levels. I take the entire options chain and then I do some magic to find my anchor points. They become a part of my plan. But I also use value areas from the previous day as intraday sentiment and statistical averages as well as time of day. So all of that is kind of smushed into situational awareness that helps me figure out where and how we're doing. I'm also very familiar with the behaviors of the products, probabilities or lack thereof in particular times of day. And for this time of day, I always say we're kind of sitting on 50-50 probabilities. And the only reason why I take mean reversions is because they tend to have a bigger excursion, so they go further effectively. All right, let's tackle some questions while we track my copper trade. As you can see, it's pretty spiky at the moment. And I'm wearing my copper jacket, of course. What else am I going to wear if we're trading copper, right? Need to find one for crude oil. I tried ordering one, but Every stole it from me. So Every is a courier that are terrible. Like their standard is to not deliver, let alone actually find a house. Alright, so Spitz says, hello Dee, I'm in a crude long. What do you think about crude getting to Asia high? I mean, you have 550, 105.50 camel wall ahead of that, right? So just be careful what they do. There is a decent chance, however, Asia high tends to be a weaker, how would I put this? It tends to be a weaker reference level than the London high. And if they go into a high, that's fine, but then you get this reversal, and the ultimate high or low on the day is typically made during the later part of NYMEX, not Asia, and by a mile, right? So you can kind of call the high of day anything, right? You can call it just by like going one tick above Asia and then saying, well, it went higher, right? But no, crude oil actually massively usually extends either the high or the low from Asia, and that becomes the high or low on the day. So very much skewed towards the NYMEX activities. So just be careful. Yes, there's a good chance, but you have a very big gamma wall level at 105.50. So unless you see some big sort of dealer hedging through that level where, you know, let's assume that there's short calls around 105.50. If the market starts running through that, they actually need to buy more outright futures, which fuels the move upside, causing like a gamma squeeze, as it's called. So, yeah, so just be careful around 105.50. I know that you see me holding trades forever and ever, but that's only on certain days when the probabilities are in favor of such trades. For all the other days, my risk reward, which kind of ties into the next question, my risk reward is actually pretty variable and malleable. It's not like set in stone. What am I drinking? I'm drinking an energy drink called Celsius. I typically have about a third of it, so one tin lasts me for like 3-4 days. One tin per week. That's all I'm doing. Yeah, so nothing serious. I drink very little. I can't because of my illness anyways, so, but luckily caffeine is not a sensitivity of mine, so it's great. Yeah, so my risk reward will be heavily dependent on the day type that we have. So one day I might be shooting for a default 2R. Another day I will be taking things off at 0.8 and 1R. And then if I notice that there's a bigger swing in question or the probabilities fade for, you know, the opposite side of the story because of how the price is behaving, I will then stick with the trade, do or die. Like I'm a dog with a bone who has resource guarding issues on those days, and I will just not let it go until my next target is reached, or at least reaching somewhere within like 20 to 30% of it. Now, one thing that I do look at is how far are we from the auto liquidator on Topstep. And in that case, if I'm sitting at about 1.5 R on a bigger trade, what I identify is going to be a bigger trade, I will then take it off and be happy with that. So I don't really necessarily shoot for, let's go for 3R every day. That's just silly, and it doesn't take into consideration the risk model, the day type, and whether it's a range day, limited auction day, double-sided auction, single-sided auction. It does nothing but focuses you into one bias. Terrible way to live as a trader. For intraday trading, you need some pretty high-level skills that will allow you to be more fluid intraday. Now, I don't mean grasshoppering, I don't mean flipping and flopping around the same area because you can't figure out what's going on. It means reflection on how the day is progressing. And even when I'm getting hit like multiple times on the same trade idea, notice on the days when that is happening, probably on my own streams, is that I'm sticking to the same direction. I'm not going, hey, the short didn't work out, let's now try a long. It's like, at that point it just becomes a guessing game, right? It's like, oh yeah, well, long didn't work out, so short should. No, I will still stick to the same side of the picture. I'm like, okay, let's try a short a couple of times. If a short doesn't work a couple of times, I will then try to wait for about 15, 20, 30 minutes and then see whether maybe there's a cause for the opposite side. But then if that doesn't work, I will be like, you know what, this is just not my day, and the market is just not playing ball. Like whatever I'm doing here, it's just not working. And those are the toughest times. Those are the times when you need to understand how error-related negativity affects you and how it sends you into a fight or flight mode. And, I'm criticized for many things from various people in YouTube. But, I know what works for me, and I know that, like, for example, every time I was in some profit, but it was nowhere near 2R or 1R, and I was playing a bigger trade, so I'm kind of sitting at like 0.5R profit. But in my style of trading, let's say on crude oil, that could be like 120 ticks in profit. But because I'm using larger stops, people are like, why don't you move the stops? It's because I know that crude oil is so whippy when it gets itself into like this sort of a situation where it's like highly volatile. Trailing stops on crude oil, unless you're just gonna be like hit and run trader, which I'm not, it doesn't work. It doesn't work. And the only time it's safe to enter right now with the average ranges that we have to like scale in, I used to scale in at 50 points before the madness began. Now I scale in at 100 ticks. So it's like 100 ticks, $1, then I might scale in, and only one. I always start with multiple of micros. If I'm planning to scale in, I do not start with one, then add another one, because that messes with the average range too much. So if I'm going to add another one, I would rather add it when the trade is technically in a drawdown, but still within the zone that I'm looking at. Like, for example, this copper trade, if it's still in and around the gamma wall, but it dipped down to a gamma wall, but my entry is not, so we're still holding the gamma wall, and it will be safer to enter somewhere there, even though technically it's like DCA, right? But it's a sensible DCA where you never go over the maximum default position size that you set for yourself, and you also need to know the expected value for such positions. So I do have my own rules of how I scale in or out. I'm not against any of it. It's just that in the past on minis, I found that the variance of my P&L was just too much. And one of my goals for this year is to keep the prop variance to a bare minimum. So, if I have a losing day, I want it to be heavily, heavily controlled. If I have a winning day, I want it to be massively bigger any way I can, even if it's a range day, using all of the, interesting data points that I work very hard on, and most of my day is spent exploring probabilities, reminding myself of probabilities, scanning what London has done in relation to how NYMEX then develops, or COMEX. And it's not like, oh, it's a level. No, most of my time is literally spent data crunching. And I know that sounds boring for some people. To me, it's endlessly interesting. Oh, we have the GOAT, John Hoagland, has joined us this morning. Hi, John. You're back, I see. Very, very nice to see John in chat. I'm always so happy when I see Hogan here. Need to drag him on one time. So yeah, so my risk reward to tackle JKX's question, how many R do you shoot for on a green day? I don't. I never approach a day thinking, right, today I'm going to make 1,000, 2,000, 4,000. I never do that because you don't know. And if you come to the market with a mindset that today you're going to become rich or some silly thing like that, that is going to work against you unless you have an account balance that can be safely used in order to generate larger amounts of cash. I'm always on the side of smaller position in relation to the account balance, and then aiming for more ticks rather than aiming for a high amount of trades on big size, tiny stops, and multiple times entering and risking the trades. Now, some people will argue that the longer you are exposed in an open position, the more risk you're exposed to. I heavily disagree with that if the risk is within the allowance of the account balance. I think it's far more risky to expose your account balance to 100 trades per day, where you're constantly entering, exiting on a very large position size in relation to the available account buffer. Okay, so I'm always like smaller size, more ticks, smaller size, more ticks. But the more ticks part is a variable that will depend on the day type. So it's not going to be like, hey, I always shoot for 2R or I always shoot for 1R. Sometimes it's like, as a default, it's 2R, right? If I have to like gun to the head, D, what's your default? R multiple. But that will heavily be dependent on how the day is developing. So if I don't see the movement that I want and I'm now suspecting a more range bound day, I will absolutely take 0.5R. I'm not shy, And to me, that doesn't matter what the dollar amount is. So while I do have a risk model that I work on, that's what brings the smoothness and the expected value over time. But for me to be focusing on any single day and expecting today I must make X amount of R multiples, that only leads to one road, a blown account. Because what happens on the day when things don't go right? So suddenly you're looking at one losing trade, second losing trade, third losing trade, and you get to the end of the day and those dreams that you're going to be making 3R today or 5R today, they just fade to nothing. So my question is not how much R multiples do I aim for on a green day. I aim for how many trades can I do for this time of day and then stop before I realize that the market is not playing ball. It's a different question, right? So you can think about the upside all you want, but to me, upside sorts itself out. My trade locations are always slightly bigger anchor points where swings typically tend to happen due to dealer activity. So I'm not getting involved in, subpar levels. I will run a sustained auction trade as a hypothesis for a single direction day. But honestly, in the last sort of 2 years or so, I've completely stopped jumping into breaks of the initial balance. Instead, I look for a setup that is alternative for the breakout. I look for a pullback and then a continuation. I have names for those in my methodology as well, because I've noticed more often than not the sustained auctions always have some sort of a wiggle back towards the initial balance and even a shallow or a deeper test of the initial balance before the continuation. So I take all of that and again smush it into situational awareness, and then I try to do the best that I can to get involved. I don't shoot for perfection. I don't shoot for sniper accuracy. It never bothers me. And the reason why that came about is probably because when I was forced to trade with a lot of size, I realized that all the trades will still work out regardless of your entry point. And it was a huge huge epiphany for me, because up until that point I was like, oh, I have to go in razor sharp at the supply and demand area, or exactly at the ADR high, ADR low. But when I started trading with size, I would spend like up to 90 minutes trying to enter the whole position. Any sort of accuracy just fades. The only thing you're worried about at that point is that your average price that you end up with is somewhere in the ballpark of the zone that you were looking at. Okay? So from that point onwards, I was like, why am I so bothered about, trade going into a drawdown when it's going to work out anyway, and the probabilities will play out over time. However, I am stressing out over a little bit of a drawdown, so I just learned not to worry about that. So as long as we're in the ballpark, as long as my stop loss is under or over a level that I'm referencing and it's a decent amount away, I will just sit there, not be bothered by anything, and I will wait until the trade does what it's supposed to do. That is in stark contrast to what other people are doing in the retail space today. Everybody's like, oh, we have to get in, we have to use 3 tick stop. It's like, that's great, but we have markets that are moving thousands of ticks per day. If you try and do that, I would argue that unless you're like a super advanced trader, the 3 tick stops, 10 tick stops, even 10-point stops in something like NQ, I would argue that that's too small, and it doesn't allow you to stay in on the trade in order for the hypothesis to actually appear. So, there has to be some sort of scalability on your stops that reflects the volatility of the product. If you're just rigidly always looking for 10 points of stop, again, we go back to situational awareness, where you're not taking into account the state that this particular product is in, and you're just like horse with blinkers on. I'm using 10 ticks, or using 15 ticks, or whatever you use, right? So obviously your position size has to fluctuate with that. So there is a diminishing return, let's say on MGC. If you want to give it time to develop, you absolutely cannot allow it to basically shake you out if you're using a 50 tick stop and then it goes your way, okay? Why? Because then you get frustrated, then you get angry, then you start revenge trading, then you start doing silly Muppet trades. Whereas when you go all the way down to, let's say, 1 micro, that might work, but you also have to figure out what is that risk of, let's say, 220 ticks on gold. Is that really something that your 50K account can survive safely? If you are wrong. So I always work from like the worst case scenario rather than, oh yeah, I'm amazing, let's just make money. Honestly, anyone who's made money in this industry, none of us think we're amazing. None of us make huge claims about being the best. We're literally just, you have to have that humility, right? If you don't, the market will humble you for you. So yeah. But you have to weigh the pros and cons, right? So is your 50K two grand account enough to withstand losing a $220 trade in micro gold, 1 micro? So if you can't control the risk past the 1 micro, you shouldn't be trading that product. You need to find something else, because it's gone outside of the risk parameters that your account can handle. So there's a whole kind of can of worms that has a cascade effect, and you have to look at all of those components as one system, one model, right? Not like, oh, what is my risk reward, or what's my stop, what's my hit rate. All of that is a part of the same thing, right? A larger picture. So now let's move on to the next question that says, also JKX, do you think averaging 1 hour per day with a max loss of 3 hours is dangerous or generally acceptable? Now, this will depend on how many green days you can string along, because according to that math, if you have 3 days of 1 hour and then 1 day of -3 hour, you're back to scratch. Are you willing to accept that? So really you need to have streaks that are much longer than 3 hours. So ideally you need to have a 6-day streak on 1 hour in order to be able to handle 1 -3 hour day. Frankly, I think that's very difficult to live. I wouldn't be able to live like that. I would be super miserable, you know, to throw away 3 days of work on a bad day. So I would actually stick to the loss limits being maybe 1.5 R, and then in that case, all right, so this is popping. Something's up. We're starting with the headline risk. What has happened? Somebody said something. Oh joy. So yeah, so think about that. You know, 3 days of 1 hour, and you're then -3 hour on the next day, 4th day, you get to Thursday, and all of your hard work for the week is poof, gone, nowhere to be seen. Frankly, I would be a miserable person if I had to live like that. So I prefer the flip side of that. So I prefer my good days to be much larger than my losing days, and I try to do the same in my intraday trading. So I try to have the same idea on a per trade basis to a degree that the day allows. But yeah, this is why my hit rate will be fluctuating between sort of 43 all the way up to about 62%, depending on the market conditions. So sometimes I shoot for 1 hour, other times I shoot for 2 hour. Some days I have the holding trades until the cows come home for 3, 4, 5, 6 hour. Just depends, right? Let's have a look. That guy Jordy says, really considering joining Topstep again. What kind of order flow tools do I get with Topstep X? None at the moment. If you want order flow tools, there are much better options out there. That are heavily geared towards order flow. And if you're remotely serious about this job, you will not try and smush all of your tools into the same platform. I use Topstep X mainly as an execution platform. I don't really want to have all of my indicators that I use elsewhere on Topstep X. I want to keep it reasonably clean with just like the biggest levels, and then just use it for the dome, and that's it. But on my other chart, on my other screen, I do have Bookmap over here, and I even have TradingView on another screen, and I have a third charting platform as well. So it's like you don't need everything on the same platform. And you know, every time a prop firm, not just Topstep, but anyone really, because I've seen this happen over the years, we went from MetaTrader, then suddenly everybody went to Ninja, now we have Project X, but then we also got Trader Rates in the meantime. So what? Every time the prop firm space offers a new platform, you're then going to throw away all of your indicators and go to the new platform. Biggest waste of time, right? So I just stick to the charting that I'm comfortable with, and then whenever the prop firms change the offering, I just use them as execution, and that's just my way of working. How do you properly add to a winner? I find my average gets messed up and I give back a lot of profit. That's a loaded question. It's a loaded question. So again, it requires a lot of data. You need to know the excursion, both positive and negative, called the maximum favorable excursion for the swings, and also maximum adverse excursion on the product. Now, I may lose some people here because I am a nerd, right? So I look at a lot of different data sets and how they can help me. So I have my own way of doing it, but almost always I say to people, if you plan on scaling in, you absolutely need to start with multiple of micros, ideally at the very minimum 2, and then maybe add 1. If you start with 1, then you start adding another one, and you start adding another one, and those add-on points are at complete nonsense levels where the product actually gets to in a natural swing and then starts to reverse, what do you have? Then you have a drawdown, but then you also have a messed up average, which is not the same trade that you started with. So that's the question that I was trying to answer myself this year, and why I spent a good sort of 2 months of the first, like literally January and February, to me, it was like practicing to be okay with scaling in. But you know, I'm only doing that on prop accounts. I still trade the same way in my private, but obviously that's a much larger account, and it can allow a scale in to like 3 minis the way I used to do it. But on prop, because of the relatively tight risk parameters, or really tight risk parameters, and generally smaller balances that people start with, you have to do something different, right? And I found that each product has its own good scaling in points. I don't know what you trade, but I have my own, and depending on the amount of times that I want to scale in, there is a cutoff point. But there's also products like crude oil that are super dangerous for scaling in before currently 100 ticks, $1. Why? Because anything before then is subject to the maximum adverse excursion. So it basically goes against you during your trade life. And if you get stuck in that after you've just added, that's just a whole bunch of stress. So what I look for are those breaking points when the market truly has almost like a point of no return, I suppose you can call it, where in most cases when it gets past this level, you then have a very good chance of it continuing further before that squiggle back down, or back up if you're in a short, actually comes to get you. And you know, by then I want to be in a pretty decent amount if I have scaled in, but I will not scale in past that point, right? So if crude oil goes against me, so it goes in my favor by about 150 points, and I didn't scale in at $1, whatever happened. Maybe it happened too quickly. I didn't manage to pop an order in. Then I will just leave it, and I will be like in a core position, no adding in. Also, it depends what time of day I'm trading. Like for London trades, I don't like to scale in because I know it all gets a little bit wiggly just before we get into the pre-NYMEX session. So there's a lot of up and down. So I don't want that stress, right? So I just stick to scaling in during the later part of the session in the US, and I typically skip the early session. That's something you probably don't know about me. I don't, like Hogue knows. Hogue knows I'm not a huge fan of trading during the initial balance. There are only a couple of times and situations where I will get involved in an earlier trade, and it's always to do with a mean reversion back to value, or some sort of a reversal from the outer edge of value. So when that's happening early, I might consider entering, but even then, there's always an additional test of that level most times, not always. Obviously, sometimes it's a pretty decisive sort of open drive type move. Open drive is a concept from Market Profile, Dalton Concepts. And you do see that more in equities, to be honest, than in my products, which is why I think I have actually learned to dislike orbs on crude oil and gold specifically. And John is probably not going to agree with me, but I could never make them work consistently. I personally can't trade with something that has a 30% of occurrence. It kills my soul, absolutely kills my soul. So I need something that occurs at the very least 53% of the time. That's like the bare minimum. And then if I identify the conditions around it, I can just about increase the probabilities of that to about 60-65%. So I do look at what sort of situation are we in, and then I would decide whether I should be running a mean reversion or not. So one of those is, for example, if we open way above value, I don't shoot for the returns to value. I will actually wait for the smash down to happen, and then they usually very rarely go all the way to value. If, like, let's say we've opened plus 5% above. Is that a good mean reversion point? No, in my eyes, that's more of a repricing, and we're probably going to end up in a neutral day type that has some sort of a limited continuation in the same direction. So on those days, I will be looking for a failed auction to go with the open rather than against it. If we're opening inside value, there is no way that I'm getting involved early. So I always wait for a very long time. Sometimes on those days, I will actually wait until like the last 2 hours of the exchange. So yeah, those are just like some things that I look at. But yeah, you have to look at data points, cutoff points, point of no return, even though some people may call it differently. And every product is going to have a different scaling point. Every product is going to have different behavior. And also that will change throughout the year with the volatility that you're experiencing. So you have to like keep running data. And it all kind of sounds too boring to people who think that this job is about sitting down and being all excited and clicking buttons and making money. Yay. It's not like that. It's like almost like being an accountant. So once you get to that point, as soon as I get off that mindset, my performance starts to slip because I'm going towards the dopamine side. So then I work very hard to pull myself back together. And in my own accounts, I very rarely trade the New York session. I will typically trade either the end of the day or I will actually trade Asia. I don't know whether I've done like 3 DAX trades recently in my own account. But that's, it's just how I trade. I prefer the quieter times of the day when things are not flying. Granny D likes slow price action, a slower price action. I still like good movement. I just don't want it to happen in like 3.5 seconds. And then me to go into either a dopamine fix excited moment, even though I don't really experience that a lot these days. It's just like, made a grand, whatever. But because I know that it's a matter of time, right? So some people will be like, oh, wow, you had a great Friday, you had a great Monday. I had a decent day, sure. But I'm under no illusions that these are like easy markets. It's just that there is movement. I know that the dealers are pretty active around the areas that I'm looking at. But I'm also trading super small and aiming for more ticks. That is my strength. So right now the market conditions are pretty good for that style. And I find that I don't need to scalp too much in order to generate alpha on the day. So yeah, Anthony tried to start with multiple micros and immediately that probably puts you on the 150K. So how good are your skills of actually banking? It's another question. And if you're not able to pass larger combines, then just stick away from scaling in. It's not time yet. It's not time yet. There will be time, but you're not there yet. You have to be very clear on where your skills lie. Trading Nickel says, I feel like you're calling out why my win rate is so much lower than usual. 4-to-1 risk reward is the standard. It's too aggressive most of the time. Can't tell you how often a 2R would have hit instead of 1. So here's something that I heard from many of my market stalkers. They come to me, I take them through, they watch the lessons, they go through the method. The method says 2R as a default, right? Whole bunch of other things that I teach. Like everything that I do here, I teach in a very structured way over there as well. But basically, they learn everything, they do really well whilst they're with the system and whilst they're like following the risk model exactly. Scaling stops, 2R as a default, taking it off early at certain times of day as an early exit rather than willy-nilly whenever the market moves. So it's either 2R or time. Maybe that's a concept you haven't heard before. So you can have an early exit that is time-based. If you've been in a trade for 3 hours and it hasn't reached 2R, bloody take it. Like it's been 3 hours, I should have done something. So if it's already 1R, 1.3, 1.5, but I will tell you, trading nickels, that 4 Rs, they're outlier days. So my students go away and then they start to mess around with the system design and without numbers. They're just like, oh yeah, I'm just gonna increase that to 3R, not even 2.5, 4R, but like 3R. Immediately the system starts showing breakdowns, lower hit rates. The whole thing just breaks down. And they're like, why every time I move away from your parameters, why do I lose? And I'm like, well, because the parameters are there for a reason. I didn't just pull them out of thin air and went, hey, I use 2R, so you should as well. It's what the numbers say. The way I scale my stops, and this is what I look for. How often would you find that the 2R move happens in a day? Now you have to run your system through Monte Carlo simulations for this. And the way it does it, it literally takes every single, let's say 5-minute bar, and it measures how much time it takes to reach the 4R, for example, how much to reach 2R, and which one of those combinations occurs most frequently. Guess what? 2R occurs most frequently. 4R infrequently, to the point that you're going to find that only 13% of trades will get there in a single day. And it doesn't matter how you spin it, these are just hard numbers. Scalable stop losses to the volatility of the product say that 2R is the most reasonable target, that is the biggest statistically viable target in the current conditions. But because my stops are scalable, that kind of scales with it as well. The only time that breaks down is when crude oil went dead on me, and then we had $1 range, but big candles on a 30-minute time frame, and then just zero follow through. Crude oil was a snooze fest for like over a year. I didn't want to have anything to do with it, even though I traded it like since 2013. It was my breadwinner product, and me and Hoop were joking that we were both divorcing crude oil, that we are in, separation talks, and that we are going through counseling with crude oil. Basically, as if it's a partner that where relationship is broken down, and we just couldn't make it work. But we seem to have reconciled, and I'm not happy about the reason why. Obviously, we have a war on our hands, and probably a huge crisis that is going to stay for many, many months, quite possibly even years, as the outcome of what has been done in such a short time. So while I'm happy to have crude oil back, I'm not happy about the reason, right? But at the same time, I was really not happy when crude oil was not moving. I can tell you that now. And I was just looking at it, you have a product that for 10 years has moved perfectly, and then you're just looking at it in disbelief. And it's like, is this thing really going to just get stuck at $100 or at a $1 range today? And then it just kept happening month after month after month after month. So it's like, so when am I going to just stop? Because it's not coming back, is it? It's been like 6 months. It's not coming back. And it was such a difficult transition for me, man. I lost my main product, right? And luckily I had other products, but I didn't trade them nearly as much. So my familiarity of other products was decent, but crude oil I can read like the back of my hand, right? I know every squiggle, I know every, day probabilities, like whatever. I know exactly how certain days play out. So that was my biggest strength on crude oil. And then that just disappeared. So I'm like, okay, so 10 years down the drain. Now let's learn all of this on copper, on gold, on, RBOB, all of these other products. Now, luckily, RBOB was exhibiting very similar patterns to crude oil. So I was able to sort of, bodge something together there. But it's still very volatile for prop. I always found it difficult to position myself in such a way that it would be safe in case I lost the trade, but with a stop loss that's large enough to handle the volatility. So that became another challenge. And again, prop game is quite a bit different than you trading in your own account, where your entire balance is a thing, and you can, start with 10K, 50K. We're realistically starting here with a maximum 4.5K, okay? So yeah. All right, JKX says, something I'm trying to clear up as I'm approaching 3 months consistently profitable, well done, is taking a short down to a level versus waiting for my bounce entry to show up. How flexible do you think one should be? I personally, this is very personal to each trader. I personally do not like doing what we refer to as caveman trades, just kind of, oh, it's going, let me jump in. On my products, that doesn't work. It doesn't work on DAX. It always pulls back after a pop outside of IB or a pop outside of some level. The levels that I use are usually hedging levels. So a lot of the times, like you see what the gamma wall on copper did here. So if you see how they like, this would have scared anybody else who didn't know there's a gamma wall there, right? And they will be like, oh my God, I mean, everything. But I know that this is a good hedge area. And that's where you trade with the institutions, not against them. So really, if this broke down way past the gamma wall, I would be like, okay, ouch, but whatever. Gamma wall broke down. No biggie. But if you saw this initially, like let's just say all you can see is this. So here's your initial bounce low. Let's put a little red box here just so you can see it better. So if I didn't have the information that the gamma wall is where it is, I would have been thinking, and if I didn't know that copper usually goes into neutral days during this time, and 13% of the days are straight up moves down, straight up, right? Just smashes through the initial bounce low and goes. 13% probability. So I know that's a possibility. It could happen, right? But with a 13% occurrence. To me, that's like, yeah, whatever, not interested. But if you were not aware of the probabilities and you're just looking at the extension of the initial bounce, you would have seen weakness at VWAP. We are trying to go lower, so let me just try to short this down to this level. But unfortunately, overnight, 550 emerged as the big gamma level. This is where the options chain is reasonably dynamic, and even though the same level stays there for a week or longer on copper, the weighting assignment to that level would change as the week goes on. So one day it might be a weaker GEX level, another day it will be a gamma wall big level, yet another time it will be a put level like today, some other day it will be a call level, call wall. So there's like different personalities to the level, but it's still the same level, right? Now, how the level changes your aspect of looking at things, that's again another issue. If it's a gamma wall, bounces from it are high probability. If it's a weaker level, it could be a bounce, but more frequently they will bounce it initially as a reflexive bounce and then just bleed through it at a later point of the day. So again, situational awareness. I'm personally not in favor of jumping into breakout trades because on my products, there is always a pullback. So I have an alternative where I will look for a smash and then a pullback and then a continuation. If I end up in one of those 13% days where we get a single print and it just carries on, I may use a pullback to the single print and then see whether there's a reversal at that point. And the way I trade, I always trade like 90% of the time I will trade through market orders because I'm looking for a reaction. And I want to wait until the reaction appears, first and foremost, however small that reaction or how big it is, and I will use that as my condition for an entry. Does that make sense? Maria says, so sad, I had a horrible 2 weeks because I'm moving and my house is a mess and I blew up my live account. I'm sorry. That's terrible. When I was moving house last year, because we bought a brand new house in the countryside, I don't think I traded much, frankly. I really don't think I traded because there was so many things happening. I couldn't even sit. And because we were having viewings a lot, and because we lived in London, the way London viewings work is to have a whole bunch of window shoppers in a day. And we have 8 dogs, and you can't just leave them there, and the real estate agents want you out of the house. So randomly, like throughout the week, twice, 3 times a day, we would have to bundle up the dogs in the car, drive them around. They're all excited because they think they're going out. and then we come back, and like 2-3 times a day. By the time that like the 3rd month came around, dogs were like so unexcited about any prospect of the leads and stuff, because they were like, yeah. They said, come on, we've got to go, you know, house view. We started telling them house viewing, because they do connect words, and they were just like, I could not find the peace to actually get my head around trading, and I was like, I can't do this. Like, I just have to either start over or just not trade for this time because it's so hard. So I feel for you. It is very difficult. Be very careful about big life events and trying to trade through them. And that also includes pet loss or something. I know that many people are like, yeah, whatever, it's just a dog or just a cat or just a lizard or just this, but they're family members. You know, for me, dogs and cats are a big part of the family. And, you know, this year I'm probably going to have to at some point deal with the fact that our Lenny, the oldest Cavalier, King Charles, who is 13 and a half now, has congestive heart failure. He's managed well, but he has wobble days. Like, I've just gone away from like 2 days where he just wouldn't eat. And we had to adjust some dosages on one of the medications. And that kicked up his kidney values, so he just wasn't hungry. But he's already so skinny. He's always been on the skinny side, so it was very difficult. Like, I'm having to go on group coaching, but you know, half an hour before then, I'm begging him to eat, and I'm like putting food in his mouth and trying to beg him to eat. And he's also deaf, so you can't even tell him what to do because he's just like looking at you, and it all works on hand signals. That was a difficult 2 days for me. One of those days was on a Saturday, so I decided to cook pork for him. That was in my Instagram stories on the Marcus Stalkers page. I cooked, you know, a nice lean pork, because that's actually a pretty good meat for the heart and building muscle and whatever. And he loves pork, doesn't react to it. So I was like, okay, I'm going to put some peas, and I'm also going to put some sweet potatoes in there. What did he do? Well, like a real man, he only ate the meat. So it's like, and I tried giving him a sweet potato, he ate one, and then even in the video, you see me giving him the second one, and he just goes, just spat it right out. It's like, what is this crap? What are you feeding me? So yeah, and it gets frustrating, right? So on those days, I'm a little bit off my game, and I'm like, oh God, now I have to go and look at the market, and you know, and it's happening every so often. I don't know when he decides to not eat, so I just have to go along with his energy. And if it's a tough day, it's a tough day. Just try not to trade too much. If you must trade, use absolute minimum size. Use 1 micros if you're absolutely itching to do trading, especially if you're in a live account. You know, it's a difficult thing because without your live now, you have to start the process all over again, and it sucks. So I'm sorry, but we have to take in the life events and how they're affecting us. Having a new child, moving house, moving to a new day job, pet loss, pet illness that requires a lot of time and care, and you know, it gets very intensive, right? And then you're trying to trade through all of that. It's difficult, very difficult. Can you please show us your performance tab? There's not too much data in here, but absolutely. So here's the first part. So only been in this since last week. It's my new account for 2026 after testing the scaling ins and stuff and being pretty happy with that. So nothing crazy. Ballpark middle of the road, right? 48% win. 1.9, okay, this is a bit higher obviously, so it's nearly 2R on a nearly 50%, so that's obviously good. Profit factor, again, reasonable, 1.8. Smooth equity curve for now, just over 3 grand. Nothing, you know, it's like, oh my God, it's moving. So here are my durations. So you can see that 72% of my trades that I hold between 30 minutes and 1 hour are pretty successful, but where it really shines is between 2 to 4 hours, right? So this is also telling me that if I'm holding a trade 4 hours and longer, that actually only has 45% chance of working out. So if I've been in a trade for 4 hours, it's probably time that I cut it. And here's the P&L. So started off very, very, very small, right? Just to get a little bit of a balance in there. And then this was Friday, so I caught the majority of that move, not all day, but the majority of the first part of the day. And that pushed the account further. And then yesterday, again, another crude oil trade that accounts for the majority of this. I think it was like about 700, over 700 was crude oil, and then some minor trades around copper. And then we've got today. So it's really not a lot of data to base this on anything. So we need to keep our head in the game and not just go, I'm the God's gift to trading. We can do no wrong. So therefore, even when I have a big day, I do not suddenly go, yeah, let's go and trade minis now because I want to get a payout of £1 million. So I'm just going slow and steady. Whenever I have a bigger day, it's a result of the market moving more, not me being in with more size, right? So yeah, and every time I have a bigger day, I always size down the next day. And I stick to like 2 and 3 micros as if my life depends on it. All right. So yeah, I don't know what my performance tab does for you, because this is my trading, but it is there. And I've had a few people going, oh, nobody ever shows the balance. Well, there you go. I'm showing the balance. Are you happy now? So it's usually the trolls, not most people, right? They're like, oh, D, why are you hiding the balance? Because I don't like staring at it, quite frankly. I really don't. It messes with my head. I hate seeing the balance on there because then I'm focusing on the dollar amount rather than the process, and I'm going, ooh, it's a 28 ticks, how much? Oh, 105. Oh, what does that do? I don't want to do that, right? I want to just go, don't care. I will look at it at the end of the week. Until then, small size, whatever the day brings me, follow the process. Don't think about the P&L. Especially not with small sizes, you know. I got into a situation where I am used to making more, and then I would be in micros and still chasing $2,000 on the day. Or $3,000 or $4,000 or whatever, you know. So you can't do that. It's not scalable. So then I found myself increasing the profit target, knowing that affects the hit rate and the ability of the... So I'm like, what the hell am I doing? Yes, I'm chasing $2-3 days and 2 micros. Yeah. So that has all about... XFA, they will push you into the margin-based and balance-based margin now. So it used to be just like, oh yeah, we do whatever. And I think my OBS just kind of stuttered there. Yeah, so I would say that if you're trading something that is extremely volatile and you're starting your combine on 3 micros, just be careful, because let's say we take my risk model for MGC at the moment. That's $220 on a 226 stop, because that's just how the ATR is at the moment. And that is basically $220 on 1 micro. So you go to 3, immediately if you lose the entire trade, that's minus $660. And that means on a 2000 drawdown, you have exactly 3 trades before you blow out of your combine. Is that what you want to do? I don't. I like to give myself 10 days before I blow out of anything, so. And then longer, the more you are in your XFA. So here it says, hi D, I've been trading 1 micro, would like to increase from 1 to 2 and 5. Ooh, so yeah, increase 1 micro to another micro for every $2,500 of buffer in your XFA. I know, it's a lot. No Eurex, Catherine. Unfortunately, Eurex is not available. Don't ask me. I don't know, because I don't even know whether they're gonna bring it at all. So I stopped asking. I got tired of asking. I've been asking for 18 months, and it's more than obvious that it won't come. So it is what it is. That's also one of the reasons for changing the time slot, because it was supposed to be a DAX show, and then we ended up staring at the quietest part of the metals. What do I think Trump tweet means for oil? Honestly, at this point, nothing. He's just talking a lot. Until there's like a ceasefire or they actually agree on some points, I'm not really reading too much into it. In fact, I got called a Trump hater the other day, last week, for saying he's talking about a deal within 5 days. I would be very suspicious of it. And we had a troll in here going, it's more than obvious you're a Trump hater, so I'm out of here. And I was like, what did I say that's it? Like, I don't hate the guy. I actually think he's very entertaining and he knows it. I think he's almost like half comedian, which we've never had. But, you know, remember he was on SNL, yeah? Does anybody remember this? Because I remember seeing that. Him making fun of himself, yeah? So everything that he says, I'm always like, you know, even this thing with boots on the ground, or little boots on the ground. It's like, what you're actually going to send people there? Well, we know how that ended previously, right? So he sends people there, whole bunch of people die on your side, right? And then he pulls out. So it's like, is this what we're doing again? So we send troops, we get casualties, and then it's like, oh, actually, they're crazy. We're out of there. Because, you know, you're dealing with nations that have a pretty fundamentalist view. And I'm not sure that people get that. You know, I come from a country where we had that, right? And you have people even now that are so, like, just... I disagree. I actually get into arguments whenever I go home because of this. Because I go... Guys, like I had arguments with my late granddad about this as well. He served in the army before we were a communist country. He served during the First World War. No, sorry, Second World War. And he was even a prisoner in a concentration camp. He managed to wangle his way out because he paid... He was a shady dude, my granddad. He managed to pay... the one of the guards with a box of cigarettes, and he said, if you can keep the gate open, I'll get you a box of cigarettes, which was like a huge commodity back then. And he did it. So he ran through the forest and everything and managed to hide in Germany for like quite a few years before he kind of came back. Made a child with a guy's daughter that he was hiding in his house. He was like a carpenter dude and had a daughter. So what does my granddad do? He knocks up the daughter. So my mom had like a half brother that we never met. Crazy stories. But yeah, we also had, you know, very huge conversations like that were very heated. Because I said to him, you know, back in the day, Milosevic is not good. He gives me my pension. Yeah, like 10 years late. He's supposed to give you your pension. It's the government. And yet he's like, hey, here's a bulk payment because we haven't paid you for like 2 years. Sorry. And I'm like, do you really think that's okay? Oh, no. You know, the totally brainwashed stuff that I just don't resonate with at all. And, you know, so I always get into these arguments because I'm a pretty heated person who can argue my point pretty well. And I know history, and I know, you know, I know a lot of stuff about a decent amount of things. I don't know everything, but, you know, I read. I read. And people don't like that. So they try and defend their views, but they don't have the full picture. So then I spew out some facts, and then they try and argue on it, but then I spew more facts, and then we get into just a complete... So yeah, even with my dad, I had arguments with him. So, and he was more on the, you know, pretty loose guy who's, you know, all cool, you know, musician, whatever, did quite well in life and stuff. I'm long, yeah. You want some platinum? I haven't looked at platinum in a while, I'll be honest. It's kind of in the ballpark of it's gone insane on the volatility, but it's not, there's no micros. So it's still $5. And to me, it's just, don't even touch it. Because unless you have 50K of actual balance in your XFA, not just a 50K nominal, I wouldn't even touch that thing with a barge pole, frankly, because it's just like too big. You enter one trade, it's like, whoosh, and the spreads are massive in it because it's a thin market, even at the best of times. Can't even imagine what it is right now. It must be like nothing. Ooh, one contract, nothing. Yeah, look at it. Nothing, one. Nothing won. Don't trade this, guys. Don't trade this. This is terrible. So, and $5 a tick. So if you get slipped, the account is like bye-bye. Even the 150K account, just don't touch this. Like, so I have no opinion on platinum other than don't touch it. Touch it if you want. Listen, not financial advice. Do what you want with your own money and with your own combines. But my suggestion would be that it's way too risky to trade platinum until it settles down. I was trading platinum on a 30-tick stop, like just I don't know, 6-7 months ago, comfortably. And then everything started changing. The volatility went higher, and it just went crazy. So for me, that's a negative on prop and platinum. Let's see. Catherine says, I had a hard stop to 50 and still blew my account, but it was due to the chop and I should have waited. No big deal, we'll start again. Yeah, I mean, starting again is not shameful. It's just like, hey, you did the best that you could. Things happened and we learn from the experience and we dust ourselves off and move forward. That is something that you have to accept as a trader. It's the hardest profession ever because of that aspect. There's a lot of failing, but as long as you don't give up and you learn from each failure, so to speak, and just remember, if you never stop, you can't fail. That was always my motto, to the point of lunacy and annoyance of everybody around me. And I'm like, well, I'm just gonna keep trying. And that's how I got to do some amazing things in my life, right? I didn't do them by hiding in my bedroom and going, oh, it's very scary. Oh, I'm so scared. No, I'm like, no, let's try again. You get smacked on the face, lose the live account, try again. You get smacked on the face, lose a ton of money in one day, you try again. Team, no giving up, yeah? And thoughts on your Forex futures. JK, I will be honest, I don't trade Forex. I'm not interested in it. I traded in the first 5 years of my career. I haven't looked at it since like 2017 maybe, because it went to the low volatility side of things, and that's one of my mental triggers where I sit in a trade, nothing's happening, and then you're like, oh great, 4 hours later I'm 10 ticks up. Slow clap. And then I start losing the plot. So I don't want that. And I'm, not doing Forex. I think JPY has looked better recently, but I don't know. I'm a commodities trader through and through. I've been doing that since 2013 religiously. I'm happy where I am with my commodities. I'm not really a Forex person at all. What is the crime? Says for the Let's Make a Deal fans, the Monty Hall problem, the Monte Carlo simulation is the same. Okay, that's interesting to know. Dark Penance says, I mainly trade GC, sometimes ES, and looking at trade management strategies that generally struggle with holding winners and cutting losers. See, I only cut losers if I'm like a million ticks in profit and then it goes back to my entry, because that means some news stepped in and it's like, whoa. So I don't, I try to get out if I can. But if it's just like wiggling around and the trade hasn't really started developing yet, I'm going to leave it. I joke that I leave trades in until the cows come home. That is the reason why I get bigger wins on the days that offer those sort of conditions. But that is also the reason why I have long times and you saw that my winners are a certain amount, and then if I hold the loser over 4 hours, it means that it's not doing what it needs to do, but it's still a 4-hour hold, right? I really gave it a chance. It's like, dude, you had more than enough time to do something. I'm done. And that's when it's like, it's a loser. But because of the choice, again, comes back to the trade location, doesn't it? So for me, it's a choice of trade location. You cannot aim to hold trades that are at crappy trade locations. I'm going to tell you that very honestly. If you're getting involved on a range day in the middle of the range and you're expecting to hold a range trade that has a really subpar trade location, that ain't never going to work because it doesn't have legs. But if you're looking at a mean reversion, like let's say a failed auction, which is technically a mean reversion trade, from a gamma wall as a bounce point, that will have more legs to develop into something more. But if it doesn't, in 4 hours, you still have to close it. So I will sit on this for as long as I can. But if it doesn't do anything in the next sort of 3-4 hours, I'm taking it wherever it is at that point. And in fact, if it gets to 1.5 R, making the initial balance neutral, day type during London, I will be happy with that. So I may not hold this into the initial balance of COMEX. So maybe in 5 minutes after I'm done with the stream, I take this and I have a little buffer of $162. Maybe, I don't know. But it's because of the trade location. The trade location has to be the reason. I see so many posts on Twitter who are like, oh, when I went to 1-to-1, I suddenly became profitable, blah, blah, blah. Tried going for a 3R, that never worked. Yeah, because you're getting involved at really subpar trade locations and expecting 2, 3, 4, 5 hours. That's not how the markets work. If you're not good at trade location selection, 1-to-1 is your best bet. So that's absolutely fine. But that means if you want to hold longer, you need to look at your trade location selection. And you can't be willy-nilly entering any move that you want. You have to wait for good, large orientation points. Hoag's weekly kickoff points, amazing levels, right? My gamma walls that I do every single day on here. Also super strong areas that should do something on the day. Usually it's a reversal, but under the right conditions, it's an accelerator, right? It depends. Like crude oil, if we go over 105.50 today, that might be an accelerator. Maybe not, but you know, we missed it by a little bit. This is actually normal during London to miss the larger gamma wall and then go and retest it later in the day. But yeah, trade selection has to be absolutely spot on, and then you have to let it run in a zone. So it's a different mindset. So, you know, trying to make a blanket statement of, oh, I suck at cutting losers and letting trades run. Yeah, because your trade selection is probably not that great, honestly speaking. And in your case, yeah, 1-to-1s should be awesome, right? Now, cutting the losers, if you have a high accuracy, so if you're at 70%, even if you're 65%, right, that's still enough to absorb a complete -1R because you have a higher hit rate, right? If I do that, and if I take 1-to-1s, but my hit rate is 50%, that's a losing system. So I can't afford to do that. But I also know that my strength is in picking bigger trade locations that have more legs in them. So those are just some points to think about when you're making statements like that. Maybe 1-to-1 is your jam. If it's working for you, why change it? You don't have to have a larger risk reward. You have high accuracy. If you're consistently profitable, you have a 1-to-1, you can string quite a few days that are green. Don't change it. Like, don't fix what's not broken, right? If it ain't broke, don't fix it. Isn't that the saying? Yeah. Do I use order book and VWAP? Yes, but only so order book I will use at the point of entry and exit. Once I'm in a trade, I just stick with it. I do not stare at bookmap sitting here for 4 hours going, you know, I leave it to develop. It's like, okay, I've got my entry, bounce from a gamma wall. Now let's just see what it does. And then you come back, you go walk the dogs, come back with fresh eyes. If the trade is still there, brilliant. If the trade is not there, whatever, we look for the next one. Yeah, don't over dramatize it. So yeah, when it comes to VWAP, I use it more for like a directional indicator rather than, hey, it's VWAP, let's go long or short. Mostly I will use it as a target. Sometimes I use it if it's like a failed auction from VWAP. That's actually not a bad way to use it, but it's a minor thing in my strategy, and in a very late edition as well. So I've only been looking at VWAP since I had Coach Ray, who I was mentoring back in 2019. He was using VWAP a lot, so I started looking at it, and I'm like, yeah, okay, I can see that. So, you learn from the people who come to you, and then he becomes my coach because I hired him to do some coaching for market stalkers, and he was so amazing because he's a teacher. So I'm like, all right, cool. And then he went on to get hired as a coach with Topstep as well. He has one of the oldest accounts at Topstep too, so that's good because Mama Bear D is very proud, even though he's older than me, I think. Yeah. I don't laugh anymore with Trump. How can I? I don't know. I still think that, look, he says some things, and I will have to leave soon, but he says things that are true. He says, I'm the only one who's ended conflict in the Middle East before. He is correct. Okay? He is right. The only president who's done that multiple times. So I'm neither for or against him. He's a politician, and right now he is somebody who has a lot of effect on the markets. And whatever he says, I have my own opinion how exaggerated those opinions are, those statements are. But at the same time, I will take it with a pinch of salt and see whether I can do something with it after the craziness post-Trump tweet settles. I'm happy for the volatility. That's all I'm going to say. What if I would like my XFA to reach a certain nominal before going live? Well, that's not really down to you. That's down to the risk team. I would also be willing to not take payout during that phase. So you're talking about almost like building some sort of a buffer. Well, I mean, any buffer is good. But at the end of the day, we're playing the game of time and expected value over time. Not, can I make, an X amount before they push me into live? So yeah, why would you want to go live? Not talking smack, just curious. It's not about wanting, it's about me being live in my private accounts and having been live with Topstep twice. That is something that just happens. The rules have changed recently on that page. I don't know why or how, but at the moment, UK is not allowed to do live. Don't ask me why, ask MP, but I've seen that change. And I just hope that it's some sort of a broker misinformation or like a temporary measure due to the Middle East war. So we'll see. You can swing trade in live only if you can really explain it why that should be to the risk team. I don't know anybody who's managed to do it so far, so there's something to be said there. It's too much risk because the initial margin goes into effect whenever you carry over into the close. Braz says, D, I almost went to, let me just do quick fire here and then I'm going to be out. I almost went into tilt today, was down 277. My XFA balance is 4,500. What do you think should be my maximum loss limit? I usually trade 1 to 2 micros, but started trading 5 when I was down around 100. Well, do the opposite of that. Continue trading with 1 micros until you're out of a drawdown. Do not increase size. This is where system design is done willy-nilly by retail traders. Don't do that. That's stupid. That's silly. That's muppety. Stick to the position size that the risk model tells you to do. If you're in a drawdown, claw yourself out of it on the same position size and give it time. If you keep getting into drawdown, it means something is not working in the process. Is it the market? Is it you? Is it the trade location? Is it the risk that you're assigning? Is it the stop loss size? Is it the targets that are too small, too big? Something somewhere is not fitting, okay? I do use Bookmap, Snuff of Platypus. I say this all the time. It's always on my other screen. And only at entry and exit, typically. That's all I have for you today. We ran out of time. Wow, time flies when we're having fun. I'm probably going to book some of this 241 to take profit because I don't really want to be in the volatility situation. Might wait until it pops to the opposite side of value if we're still pre-COMEX. That's all I have for now. Enjoy the... Sam says, listen to this young lady. Yeah, very young at 45. But thank you, Sam. Probably owe you a drink for that. enjoy the main daytime show. Enjoy the opening call. I will see you again tomorrow because I will not be on for the rest of the day. But do join me tomorrow for another episode of the Metal Markets when we're going to do all of this all over again for Hump Day. Until then, I'm Marcus Stalker D. This is the Metal Markets, and this was Topstep TV. I'll see you soon. Take care.